Hey everyone, and welcome to the Tesla Daily Investor. It is Monday, 21st of April 2025, and it's around 3 o'clock here in London. And I'm gonna do some investments for today. But before I do that, I just wanted to update you on my portfolio performance. So at the moment, the money weighted rate of return is around minus 76.90%. So as you can see, the portfolio has taken a big hit. So basically what happened was I started investing more money. I had a bit of money. I had the majority of my money in my GIA, general investment account, and then what I did was just after Christmas I started to invest more aggressively into the portfolio. So started investing more into the ISA, more money into the SIPP as well. But as you can see, even though I've invested quite a lot of money in, the money weighted rate of return has gone down quite significantly because I've been investing while the market has been going down. So I'm not seeing a lot of return here. It is looking quite bad. It is looking quite miserable at the moment. But again, I'm just gonna keep on investing no matter what, and I'm gonna try and make my portfolio as tax efficient as possible. So even though I am 76.9% down since I began investing, I'm still just gonna have aggressively invest whenever I get the money. I'm not gonna stop. Previously, when I started to invest, I used to invest some money near the top, and then when it's going down, I used to start, stop investing. But you have to get through these periods where your portfolio is going down. You just have to keep on investing no matter what. So I'm doing this every day, so I'm seeing like the markets go down every day, and it is quite painful, but at the same time I'm trying to change the way I think and just tell myself that these are very good quality companies and I'm getting them at a very good price. So at the moment, the money weighted rate of return is minus 76.90. So it is looking quite bleak at the moment, but I'm just going to continue investing no matter what. So that's the portfolio performance. So if I go back to the portfolio, you can see my general investment account is around 38.5k. My stocks and shares ISA, where I did the full 20k contribution, sits around 13.5k, and my self-invested personal pension sits around 29,000, because I've been selling my investments in my GIA account, and then I was putting it into my self-invested personal pension. So what I'm going to do today now is, the reason I'm doing that, the reason I'm moving my money from my GIA to my self-invested personal pension, is so I can lock it away for a longer period of time. And also, when I add money to my SIP, I get tax relief from the government. So excuse me, so I get tax relief from the government, and that's going to come in about 6 to 8 weeks time. So when I do get that, then I can invest more into these companies. So what I'm going to do today is I'm going to invest the amount of money in the self-invested personal pension, and I'm going to sell the equivalent amount in my general investment account, because remember, the purpose is to lower the amount in the general investment account and increase the amount in the stocks and shares ISA and self-invested personal pension. So I'm going to do that today. So before I do that, I'm just going to check how Tesla, MicroStrategy and Nvidia are doing. So as you can see, Tesla today is down around 6.3%. So again, everything is on sale at the moment, and Tesla is going to be releasing its earnings after the market closes tomorrow. So that should be interesting. So there might be another buying opportunity. And also, if I look at MicroStrategy is flat today at the moment, $319. And if I look at Nvidia is down as well, so it's under $100 again. So again, a good buying opportunity. So $96.92, so down 4.5%. So here's what I'm gonna do now. I'm gonna go into my SIP, I'm going to invest the full amount, which is 5,800, and from that 5,800, the tax relief I should be getting, so I'm just going to work it out. The tax relief I'm going to be getting is going to be 1,160 pounds. So that's going to be arriving in about 6 to 8 weeks time. So I'm going to be doing that. So let's do that now. So I'm gonna, as soon as I buy this, what I'm gonna do is I'm gonna sell the equivalent amount in my general investment account. So let's do this. So let's make sure it's Tesla. So 580 0.77, so 5805.77. so I'm just going to make a note of that. Okay, so I'm going to review the order. So that's 34.227 shares. 34.227 shares. Put the order through. Okay, so that's done. So then I'm going to go into my general investment account and sell the equivalent amount. So 32.77. So let me just double check how much I sold to get the exact figure. So 34.2604, 34.2604, 32. Actually, let me just make a note of that. My brain's not working today. So it's 34. Let's do this properly. It's going to go into my general investment account now. Go into Tesla, sell. So 34.26. So 36. Yes, I'm going to be losing some amount because the share price is going down so much. So I'm going to quickly review the order and I'm going to put the order through. Okay, so that's done. So again, what's happened is I have lost some money changing it over from the GIA to the SIPP, but over the long run, hopefully I'm going to be saving money. The reason for this is I'm going to be paying less in capital gains tax, and also the tax relief that I get from the government when I invest that money is going to grow, and then when I realize the profit and take money out of my pension, that's gonna be the time when I pay taxes, but I'm gonna try and minimize it as much as possible. So this move, although it is painful to see that slight loss, over the longer term, it's hopefully gonna be beneficial for me because I'm going to be saving a lot of money in taxation, and the amount that the government has given me in tax relief, when that is invested and that compounds, it's going to hopefully make me more money than the money that I've lost. So that's the theory behind it. So what I'm going to do now is, this is the final time I'm going to be doing this, moving money from my general investment account to my self-invested personal pension. The reason for this is because if I sell too much, it's going to trigger a capital gains liability. So I want to prevent that. What I'm going to do is, next year I'm going to be selling a little bit more, next tax year, and then the next tax year I'm going to be doing a bit more of that, unless the prices go down even more and there's a loss, in which case I can sell more and then move it to my SIP. So again, I'm trying to make this portfolio as tax efficient as possible. So once the money in my general investment account has settled, I'm going to move it back to my bank account, and then I'm going to use that for my household expenses, set aside some money for taxation, and the remainder I'm going to be using for the emergencies that I've had. So I'm not adding any more money to my portfolio, but what I'm doing is making it as tax efficient as possible. So that's all done. So for anyone who's new to this channel is all about long-term investing. So basically what I do is any stock or share or company that I buy, I will not sell for the next 5 years, and I will try to hold it for at least 10 years. I'm a very aggressive investor, so I try to invest at least £300 into the stock market, and I try to aim for 500, but because I've had some emergencies at the end of this month, I haven't been able to do that. So going forward, I will do that. So that is my intention. So that's number 2. I'm a very aggressive investor. And number 3, I'm a very volatile investor as well. So I pick stocks that are highly volatile, like Tesla, MicroStrategy, and Nvidia are probably the highest volatility stocks in the world, or in the Nasdaq 100 or S&P 500. So these are very volatile stocks. They could double in a matter of days, or they could halve in a matter of days. So you have to expect this kind of volatility. And finally, number 4, my aim is to make this portfolio as tax efficient as possible. So basically maximize my stocks and shares ISA allowance and maximize my SIP investments as well, and keep the amount in my general investment account as low as possible. So that's the plan. So hopefully that's going to help me achieve my long-term goal, which is to make this portfolio, the total of my general investment account, total in my stocks and shares ISA, total in my self-invested personal pension, I want to make that into $1 million. So I've given myself a time frame of 5 to 10 years to do this. But at the rate at which I'm going and the rate at which I'm projecting the price targets for Tesla, MicroStrategy, and Nvidia, I should be able to hit my target between year 3 and year 4. Hopefully sooner if it goes crazy. But again, it's gonna be a bumpy ride. There's gonna be a lot of volatility, and I'm prepared for that. As you can see, my portfolio is down around 77%. Let's have a look at it again. So I'm just having a look at the money weighted rate of return now. So for some reason it's showing 396% up. So obviously that's a mistake. So something hasn't registered yet. So I will check that again tomorrow. But again, the portfolio is is showing a big loss at the moment. So once it recovers, and then once it starts to go on its bull run, that's when I expect the portfolio to reach about $500,000. And then if I keep on adding, making contributions, getting tax relief from the government, making it as tax efficient as possible, hopefully I should reach that million between year 3 and year 4. But my long-term horizon is between 5 and 10 years. So within 10 years, hopefully I should reach this target. So that's it for today. Join me tomorrow, where I'll be giving another portfolio update. And if I do have excess money available, I'm going to be investing it into the market as well. So stay tuned for that, and I will hopefully see you tomorrow. Have a great day. Take care. Bye.